I do want people that are just, they cannot sleep, they cannot breathe, they cannot do anything until this is successful because it's hard and the ups and downs are brutal. And honestly, that's what I would look for in a GP too. I want someone who like no matter what, they are going to leave it all on the field, no matter what. And I think that's what LPs look for in us too.
Welcome to Venture Voices, where we interview emerging managers within venture capital. And today we have the pleasure of having Sara Adler from Wave Capital. Sara, welcome.
Thanks for having me.
Awesome.
Excited to
Well,
be
thanks
here.
for joining. And we'll kick off with, a little basic question here, So can you tell us more about just like who Sara Adler is and how you became, a founding GP here at Wave?
Yeah, well, and you've been on this journey with me for a while, man. So you could probably tell this as well as I can. But early in my career, I started in finance and kind of always fell in love with economics early on in undergrad, and found my way into investment banking, as many do. Quickly realized that it wasn't for me, but it was a really great experience and led me into venture capital next, actually. So I joined Menlo Ventures as an associate for a couple of years and felt like the parts of the job that I loved are still the parts that I love, which is working with founders, evaluating companies. But I just felt like I needed some experience in a company to really make the the words of wisdom that I was trying to give to founders actually have some weight behind it. So I transitioned at that point into the bulk of my career, which was in operating. So I joined Facebook in 2011 before they went public and during their heyday of the acquihire M&A era on the corp dev team, which was incredibly fun and definitely got some gray hair and wrinkles out of it, but also learned a ton. And then was fortunate from there to go to Dropbox, where I led their M&A team for a couple of years, also incredibly acquisitive time frame for them. And then most recently, I was at Airbnb, where I joined to build out their M&A function, which is where I met my now partner, Riley. He and I just, worked together really well. He led data science at the company. We evaluated a lot of data tools and oriented businesses to acquire. Didn't end up acquiring any of them, but worked really well together. And he left a little bit before I did and kind of tapped me with this idea of starting a firm, which never had occurred to me, having been out of the venture ecosystem for about a decade at that point. And if anything, I just assumed I'd go back to a big firm because that's what I'd done before. And I'd only been part of really big companies at that stage. But the more I got into it and kind of riffing with him on what it could look like to start a firm, the more excited I got. So that was 5 years ago. And yeah, here we are today.
Nice. Well, fortunately, this Zoom webinar does not have super zoom, and so we can't see those gray hairs. And so I think you're
I
good
know.
now.
The Zoom filters are helping me.
And so obviously, you and Riley have started Wave. What about, I guess, the early venture days at Menlo, the kind of bulk of the career at operating in the corp dev sense at various startups across the country? How has that like impacted how you kind of operate Wave?
Yeah, a lot. So, when I was at Menlo Ventures, and I referenced this earlier, but it was when you were also early in your venture career. I mean, we remember what it was like to call a Series A, $2 to $4 million round. In today's terms, that's like kind of absurd, right? And so I think as I was looking around at kind of how much had changed in the landscape and what Series A investing or seed investing had become, I just got more excited about the earliest phases of investing and was very drawn to it. Ironically, I had been joining very late stage companies, so a lot of people assume that I'd be interested in more growth investing because of that. But the types of companies I was evaluating and acquiring were really early stage small teams, so it actually made a lot more sense from that perspective. So I certainly saw the dynamics of like seed was a totally different beast than it was when I had left the game, in 2011. And Riley, his experience, he joined Airbnb right after Sequoia invested, I think it was $600,000 check. So he was one of the first 10 employees and saw firsthand what it was like to have like a, pretty hands-on seed investor help the company from that phase onward. And so I think the two of us came together from a few different lenses, but we saw this opportunity specifically around marketplace investing that felt like, the style of investing in seed was evolving. The definition of what seed meant was evolving. The opportunity within marketplace businesses was also evolving because, the ecosystem hadn't yet kind of come into that discipline as much at the seed stage. So all these things kind of came together where we felt like, we do bring some operational experience at this point to bear. That was like my big chip on my shoulder from earlier days. I felt like I had a little bit more cred. And the ecosystem had just dramatically changed. And so we felt like, we wanted to bring a similar style and concentration of investing that, I saw the Series A world from many years before, slow and deliberate and pace. I know I'm speaking your language, leading checks, all that fun stuff, but with a focus on marketplaces and at seed.
Yeah, no, that's helpful context there. I think, folks are always wondering, how does a firm differentiate in capacity? Obviously, focusing on marketplaces is one different lens for you at Wave. And so I guess, how should people think about what's unique and different about marketplaces that require a different evaluation process and or a different process of being a value-added investor?
Yeah, I mean, I think I would even zoom out to say, like, we get a lot of questions about, like, how do you even define a marketplace? Like, what does that even mean? I think, the complexity of marketplaces is you've really got two businesses that you're building simultaneously that have to match with each other with a transaction that happens on the platform. So you're building with Airbnb, you're building a supply of homes, you're building a demand generation of guests who are looking for homes to book in, and then you're matching them. And that's really what the product is. So what's really fun about marketplaces, I think, is the experience is more the in-person, the experience that doesn't happen on the actual product platform. But the product platform is critical, otherwise the experience couldn't happen. You couldn't stay in a guest home, in a host home, if you didn't discover that property on Airbnb. But if you think back to your trip, you're probably not thinking about like the app that you booked the product, the experience in. You're thinking about the home that you stayed in. And so it really brings you back to these kind of real world applications, which I get really excited about. But they're hard to start because you've got these two businesses that you are simultaneously trying to build. You can't have so many homes on the platform with no guests that are looking to book, or you can't have so many guests with no homes to book. Otherwise, the ecosystem won't take off. And so you've got the chicken and egg problem that people talk about a lot with marketplaces of how do you jumpstart it? And I think it's applicable both with B2B marketplaces and B2C across any sector. They all have their own nuance and intricacies, but at the core, you're really trying to be this matching platform that brings the two sides together. And so I think, from what we've saw, well, we don't have like a totally specific playbook because I think each industry is pretty nuanced and different. There are a lot of different learnings and tips and tricks that we've seen along the way that can help, jumpstart those early phases. And then the beauty of marketplaces is they can take a while to start, but if they do have the right network effects in place, they can be incredibly resilient and just kind of take off in spite of themselves. So that's really why we get excited about investing in them.
Yeah, I think that makes a ton of sense. I mean, obviously, you and Riley have both seen how those can work firsthand, and so can share that wisdom and playbook with future founders. And I guess the beauty of the marketplace model too is that it's one specific but still broad encompassing of categories, and so I think it gives you a lot of areas to kind of make investments and play in. Are there any particular kinds of industries or categories that you think lends itself better, or you're focusing on more there, or should we think of it more just like a pure generalist approach from an industry perspective as long as there's the marketplace component there?
Yeah, it's something that we've, debated, especially as we were getting off the ground, is like, should we have specific theses for where marketplaces are ripe for existing? And, there are areas and categories that we're more excited about than others. But we realized pretty early on that founders are the ones that are going to come up with the best ideas. The industry experts in a certain market, I very much believe, are the ones who can come up with the more interesting marketplace concepts than me from a tops down perspective. And as an investor, being too restrictive, I think you're going to miss out on great opportunities. So, the beauty of it, to your point, is it's incredibly flexible. And examples in our portfolio include a scrap metal recycling marketplace, that is not an industry that I had any understanding of until we met that team. And love how big the industry is. There's some industry dynamics there, obviously, you can imagine with scrapyards. And on the other end of the spectrum, travel oriented, more consumer driven marketplaces. And so I think for us, that obviously is a space we know very well given our Airbnb experience. But in between, there's so many different opportunities that we would never have come up with and or been looking for. So we try to keep an open mind.
Yeah, no, I think that makes a ton of sense there. And I totally agree with you that at the end of the day, that the founders are living and breathing it. And so hopefully they can direct us on where things are going.
Yeah.
And then I guess when thinking about, a startup founder comes to you, they got this amazing marketplace idea and some new category that excites you. What does Wave want to see there to get excited by a company? And not saying, hey, like, tell me what the revenue is or engagement is, but because obviously these are super early stage companies and it can only be quantitatively to some extent.
Yeah, I mean, we joke a lot that Riley, as the former head of data science at Airbnb, is like has the least amount of data to actually play with often when you're coming with, an idea essentially and a team. But that's kind of the fun of it. I think first and foremost, we are very team driven investors and founder driven investors. I think, we saw it firsthand from a few different lenses. Obviously, Riley from the ground up, seeing, the Airbnb founders, seeing the early team in the early days of it wasn't a foregone conclusion that that company was going to be successful, even though you look back and it's like, oh, it was obvious. It didn't feel obvious to them ever. So, it is a testament to just like fighting through and finding that product market fit. I saw it more from the perspective of acquiring companies and acquiring founding teams. And the best predictor of success of an integration was the caliber of the teams that we were bringing in, regardless of whether or not it was an acqui-hire or an Instagram. It was all about the founding teams and how successful they could be within the bigger organization. And so that's always that was kind of back to the how did we even get Wave off the ground? That was core to our belief. And I think something we definitely saw eye to eye on. So that's what we start with. It's a very subjective and much more based on like, years of pattern recognition than like a scientific study of, here's the check the box stuff, which, can be infuriating when talking to LPs about how we describe our process, of course, but I do think is more of like a gut feel at this point. And then from there, we really do try and understand obviously the market and the concept. And we have a scorecard that we go through when we are evaluating, companies, and especially as we get further into a process. From a concept perspective, we go into deep marketplace nerdy stuff around, what we think makes a very strong marketplace and strong dynamics, often focusing on what is the friction point that this marketplace unlocks. I think most people assume marketplaces are about discovery. So like the Airbnb example again, how would I even know how to find a house in Noe Valley in San Francisco if not for Airbnb? It'd be pretty hard. You could do it, but it's really hard. But there are also things like trust. Is that actually the killer feature that unlocks somebody's willingness to stay in the home? Or is it payments? Because it's really annoying at the end of the night when you're paying a babysitter to get cash out before Venmo existed and the capacity it is today. So there's these friction points that you can, in a different industry, try and understand, like, why is that the right wedge to open the market with? And then, there's plenty of other things that we try and pressure test: quality of supply. Are there benefits to geographic like network effects? Like, does each node make the whole network stronger, or is it really a localized market by market situation, which might be a tougher battleground, like a la Uber versus Lyft? So there's a checklist on that front for sure for us. And then finally is the market and just understanding how big the opportunity can be. This is one though where I think because of the Airbnb experience, we are more open-minded to market expansion than I think maybe other VCs. Because Airbnb, that was the biggest question that people had time and time again, even in the, Series E and beyond, was like, is this a big enough opportunity? People sleeping in someone else's house. And it turns out obviously, yes. But you had to dream on what that market expansion could look like. So yeah, that's what we think about it.
Yeah. Turns out people sleeping period is a big market.
Yeah.
People sleep everywhere, regardless of city or state or where they're going. So
Sleeping. Yeah.
yeah, that worked out quite well, or has to date. Similarly, with Uber when they was just a black car business. Apparently, people need to go from A to B
Totally.
everywhere, and so much big opportunity once you kind of take a step back, as you suggested. But gonna switch gears here for a second because you brought it up, and so tell me about this Instagram acquisition when you're at Facebook. Um, how give me some playbook there, 'cause that's interesting in general.
Yeah, I mean, it was, yeah, I look back to it was like I was such a big fan of the product of Facebook and Instagram. So it was like a pretty cool moment. Which I would also say that like I'm so optimistic for the future of consumer investing. We've had a real dry spell in our ecosystem for a while. I'm a big consumer person, so I'm pumped. Honestly, I it was like you hear about in the stories, like Zuck and Kevin kind of went off over a weekend and made it happen. And my boss at the time, who Amin Zufanoon, who ran M&A for a long time at Facebook, he was kind of in the background, like making it actually happen. But the deal actually closed over a weekend, which for anyone who has ever been involved in an acquisition is unheard of. I mean, these usually take at minimum 4 to 6 weeks of a lot of legalese and a lot of back and forth and diligence. So the fact that this actually closed over a weekend is kind of monumental in and of itself. But it was this unveiling to the world. And what was also interesting is at the time we had like a competitive product internally, like to Instagram. And so there was this delicacy on like, okay, so are they going to keep going with that? Or like, are we just stopping that right now? And it all happened so quickly that like a lot of these questions couldn't get answered for a while. So I so remember going up to the Instagram office, which was in South Park in San Francisco, and it was a team of 13 people, I think. And you know, they were all just also like, what just happened? Like this is wow. I can't believe now we're part of Facebook. Like it was just this amazing experience to be part of something that ended up being so culturally significant. But in the moment, it was just like, you know, pretty cool to watch, especially because I was still pretty early in my career, so I was learning from the greats.
Yeah, no, it sounds like a pretty surreal experience, and obviously ultimately ended up becoming a great asset for Facebook slash Meta to own, and so ultimately a
Yeah,
great purchase.
yeah.
Partic-
Oh yeah, one of the best, one of the best.
yeah,
But
particularly
at the
when you see
time, you
so
know,
many
it was like
M&A fail. So
totally. And at the time, I mean, Sequoia had just invested. So it wasn't like they had a real quick turnaround in terms of their exits. I'm sure from an IR perspective, it was great, but they were probably disappointed that like, you know, they had just won this amazing deal and it was like, you know, selling out quote unquote early. So it was really interesting because it didn't, and it was one of the first like $1 billion acquisitions in tech that we've really seen, especially on the consumer side, by far the biggest acquisition we've done at Facebook. Before that, we were doing, you know, maybe like a $50 million acquisition. So it felt risky in the moment, but obviously hindsight, it was a really great bet and was really a testament to Zuck like deciding to make it happen.
yeah, no, that makes a lot of sense. And I guess, you know, M&A leads to obviously liquidity, right? And you know, at the end of the day, I do think our LPs want to show them some DPI at some point. We as LPs in our
I
own
think
funds
so.
also want to see that ourselves. And so and you know,
Yeah.
obviously once again,
Yeah.
M&A plays such an important part there. And so, you know, having led or being a part of and led leading three different M&A teams across different companies, you know, what are the things that you can share with your portfolio companies when they're thinking about that process to optimize for them? Because, you know, manufacturing liquidity or exits or optimizing is, you know, a very big important part of being a good not just venture fund manager but a money manager. And so it'd be great to kind of think about what you want to give advice for folks when they're thinking about those M&A opportunities to sell and create liquidity.
Totally. Totally. It's something that I'm excited to like be able to tap into because obviously I really enjoyed that part of my career and yeah, there's a few rewarding parts. One is actually exiting companies. Obviously, some are good exits, some are not, but it's still helpful, I think, to guide founders through that. But also, I now have like some companies who are going through their own acquisitions of you know within their entities, and so it's really fun to now help them get up and running on that. You know, the main thing to focus to just think of is like M&A. If we think of, you know, investing and fundraising processes as like a courtship, M&A is that on steroids. Like there is one time you're selling your company the one time, basically. I mean, obviously, I guess it could get spun out and all that, but you're probably not there for that part. So it's a one-time, really intense courtship. And so you kind of have to take it as seriously as that. Like the courtship has to start pretty early. Shotgun weddings are not typical. Because even the Instagram example, that wasn't the first time Kevin Systrom and Mark Zuckerberg had met. Like they'd gotten to know each other over a long period of time. And I think people read stories and think of narratives and don't take that into consideration. But that's probably the most important thing that I would give guidance on, and I do, is build. And I don't want to, you can just get distracted. So don't spend years building these relationships necessarily, but have a short list of who the potential partners slash acquirers could be, and get in front of them. Get in front of them way earlier than you probably expect to. That's probably the most important thing. From then, a lot of it hinges on the market dynamics. Right now, it's not a great M&A environment. Like obviously there's a lot more interest to be getting acquired, but that puts a lot of leverage in the buyer's hands, and the whole buyer ecosystem has in the last year and a half been in a weird rut, not knowing what the FTC environment is going to be like on the bigger acquisition end, and B, do they want to conserve cash? Probably in this environment. Like they're shedding teams, they're not adding as many teams. So it's just been a really interesting thing to overlay on kind of the overarching principles of build relationships early. You don't want to have to get into fire sale mode ever, obviously, but it's akin to the fundraising environment. You don't want to, it never is a good look when you're fundraising and you've got 2 months of runway left. Like that's not the ideal scenario. So it's similar with the M&A outcomes. You want to have optionality and you want to have, it on your terms. And in cases where that's not possible, then you're really just trying to salvage as much as you can. And in those cases, for sure, the relationships are so important. But yeah, I think I would summarize it to say it's like fundraising on steroids with a very different spouse on the other end.
Fair enough there. So, with Wave, you get a free M&A banker and Sara, and so
That's right.
she'll solve all your problems there. But no, I think you're right on the M&A environment now. I think the bid ask spreads are super wide, right? And even another mechanism for liquidity for us as GPs and even founders is secondary, and same scenario there. The bid ask spread on secondary is quite wide, and so we're not seeing much activity in those environments right now.
Totally agree.
Yeah,
We're all feeling that.
indeed. And then I guess it'd be great just to walk through like a recent Wave portfolio company or investment. It can be announced, not announced, whatever you want to do. But just gonna get a sense of what the company does, and why did you and Riley get so excited to back that company.
Yeah, great. Well, I love all of my children, so it's hard to pick just one, but I'll pick a more recent one. Float Health is a company we invested in last year, leading their seed round. It's a nursing marketplace, and historically we had actually shied away, and normally do shy away from labor marketplaces, often because we feel like the supply base can get either incredibly commoditized or the best quality of supply doesn't really need the matching of the marketplace to get jobs. So we kind of view supply quality as a really important thing to assess on marketplace platforms. But here's why we got excited about Float. They are focused specifically on specialty pharmacies as their go-to-market. These are pharmacies that prescribe medications that have to be delivered intravenously. So these are not you and I going to Walgreens to pick up a pill or something like that. And in order to do that, a patient has to either go into a hospital to get the medication administered, or they can have it done in home, but they need a nurse to do it. They can't do it themselves. And so a nurse has to be matched with a patient in order for this specialty pharmacy to take on a new patient. Insert Float. There have been, agency models that have been doing this for decades, but Float saw the opportunity because the CEO actually was a nurse, and he had seen it firsthand, also with a personal family member. So in terms of the patient experience. And so he saw this opportunity that was a broken experience, and the care could be delivered in a much more efficient, better manner. And we met them coming right out of Y Combinator last spring. And, I think that for me, again, starting with team, like seeing someone who had such a firsthand experience as a nurse, but with a very clear business acumen and mindset was pretty rare, I thought. And I thought it like a really great combination. And the more I got invested in understanding the market, the more I realized that like this whole specialty pharmacy world is an interesting wedge into just the broader home care ecosystem of how are we going to, what has COVID, the why now question of like what has changed and why does this make sense today? Well, COVID had completely shifted how people want to receive care and how the openness from a, uh, insurance perspective of how they would be willing to bill and cover the cost of care. So I got really excited about that. And then we went through our checklist of, like why this labor marketplace I thought was different. And from that perspective, we felt like the caliber of nurses required for this, Float only focuses on ICU and ER nurses who have a very high level of skill to be able to cover anything within a patient within the home. And so that qualification of supply and the high caliber of supply combined with the flexibility of what nurses were looking for and not really wanting to work in a hospital all the time or take extra shifts there when they could have the flexibility to do this in-home work, just got us really excited. And so they've been off to the races and it's really been fun to see. The other thing I would just add is I'm a glutton for punishment. I think I love the healthcare ecosystem, but it can be painful when you have to interface with payers and providers and the whole ecosystem. The fact that Float just interfaces with specialty pharmacies means it's a very simple transaction. They don't have to interface or get in network or anything like that. And so the simplicity of that transaction also was a nice silver lining for me.
Yeah, no, it's a super interesting company, and keep saying those my way too next time, so we can be an equal wave
I
company.
know,
But
I know. We're gonna work on a deal together. I know it.
indeed, indeed. But no, it's interesting because I think that these nuanced markets are always compelling because they, I think, tend to be sneakier big than folks realize, but they're complex
Exactly.
enough to keep investors at bay to not spend time there. And so if you dedicate the time to learn about it, it can be quite lucrative. And so it sounds like a super awesome company.
Yeah, thank you. Yeah, they're actually just closing their Series A right now, so it's exciting to see the momentum that's happened. And I think in this ecosystem, in this market, I was holding my breath a bit just to know like what does the Series A look like today. So was relieved that a solid, strong company with a great team could get it done.
Yeah, well, congrats to you guys, and more importantly, the team that's running the business there. So that's great to
Yeah.
hear. You've been at it for several years now at Wave, you and Riley. And so, like, what's changed from like day one to now? Whether it's the kinds of deals you do, how you look at deals, where you find deals, how you operate with founders or not. And so, you get to see like just what's changed, or whether just have been learnings in general from the last several years.
Yeah, I mean, I think especially after the SVB crisis moment, Riley and I looked at each other, we're like, how many more of these crises is this normal? Is it like normal for an emerging manager to have like every year a different crisis? So it's tested us a lot. I think for us, we're able to stay focused on a business model, which helps a lot with noise. And I can touch on later how we're not so disciplined that we don't miss so that we don't miss out on everything. But for the most part, it does help us stay focused on from an investment perspective. But then there's everything on the firm side of like, to your point, either how you work with companies, what is the playbook that we thought we would set out with? I mean, we really thought like, oh, we're focused on marketplaces. There will be a marketplace playbook that we use, and that will be that for every single company. And very soon that was clearly not the right answer. And the benefit of our model being very handpicked and slowly paced in how we make our investments means we can take the time to talk with each company and tailor things to each company. But I think for us, as we started in 2018, the market just got incredibly hot. The seed ecosystem obviously changed dramatically in terms of check sizes, average price points to be able to lead around, and we had to really ask ourselves like what was most important, check size, ownership, leading. And we felt like leading and getting meaningful ownership was really important to us, and so that was something that we had to constantly be re-asking ourselves, and as the market was shifting, but something we really felt strongly about. And I think otherwise there was the question of like, should we be focused on marketplaces only? As a new firm, you should be asking yourself constantly and like, making sure that you're still on the right path. And we kept coming back to why we started investing in marketplaces, which is we felt like we had a competitive advantage coming from an operating career, largely driven by the Airbnb outcome. And we felt like looking around, there was no other firm that was branded around that. And having that kind of brand awareness and building that up was going to be differentiating, especially as the ecosystem was heating up. So anyway, so yeah, we've constantly asked ourselves a lot of different things. I think the only thing we've probably flexed on a little bit, especially coming into fund two, is dipping a little bit lower, being a little bit more flexible on ownership. Not too much, but a little bit, enough that we can work together now, Kerby. And but otherwise, no, we kind of love what we do. It's like I love leading. I love early stage. I think we're all probably crazy people for loving that because it's so hard. But it's also so rewarding. Like seeing companies that are actually making impact on the end users' lives. You're like, to be a small part of that journey is like really a privilege. And so, I think ultimately most things are similar and there's a lot of learnings along the way. And there's still a lot more. I think like what got me excited to start a firm and what ultimately led to me leaving Corp Dev, which was such a great job. And I was so privileged to work at such amazing companies, is I felt like my learning curve was plateauing. And I really am someone who wants to constantly be challenged and be feeling a little bit in the deep end. And man, do I feel that in venture. I think, we have such long feedback cycles and, I still have so much left to prove that, I can get into that DPI territory that I'm looking forward to. But I love that feeling of learning and growing and being around peers like yourself and others that we have in our network who are in the same phase. Like it's just it's a privileged role and one that, turns out we get to have as our job. So I feel pretty lucky.
Yeah, and I'm with you. It's definitely a very privileged job and career path, and so neither one of us takes that lightly, and that's why we're trying to do our best to succeed and enable us to raise the subsequent funds and hopefully keep
Yeah.
our day jobs. And I mean the marketplace piece is interesting too. I think that one of the hardest questions, at least for me to answer from an LP, is how is XYZ firm different from the rest? And it's really really hard in an environment where we're maybe investing at the same stage as thousands of other firms, looking at the same opportunities, oftentimes investing in the exact same companies. And so, I mean, I think it goes back to your previous question, answer on another question around like people. But that can't always be the answer of itself to the LP. And so it's a tough one to answer. And I think the marketplace angle is a good one for you all.
Oh, thanks. I mean, I think so, but it's still something that we'll constantly ask ourselves, right? And I think any founder of anything needs to check themselves on the strategy. But for now, I think it's like, are we good at it? I think so. Do we have that competitive advantage? Do we have the brand around it? All those things make sense. And then the final one is like, do we believe that marketplaces are good businesses? Like that's the most important. I want to make sure I can make a lot of money for my LPs and myself. And it's still resoundingly yes to that. So as long as those things are still true, we're gonna keep doing it.
Nice. Well, I guess it kind of like leads into, like my next question, which is actually from Michael Larson from Cambridge Associates, one of your LPs. And he, asked, seed stage firms typically start with a narrow thesis to differentiate themselves in terms of attracting capital from LPs, marketplaces in your case. But the enduring premier brands in venture have gone on a journey where they've reinvented and widened their mandate to become generalists, in his opinion. And so, how does the success of a company like a Bobby, in his mind, in your portfolio, which seems like a departure from just the marketplace focus, change or not change Wave's positioning in like marketplace?
Totally. Well, this is where I'll caveat 2/3 of what we do is marketplaces. And from an external discussion perspective, and from where I spend most of my mind share, that's what it is. But a third we wanted to keep flexible. And our promise to LPs in Fund One was that, coming from the Airbnb network and other tech companies that I've been a part of, we wanted to make sure that we were able to talk to founders that were coming from those alumni pools. And some of them were going to start marketplaces, but not all of them. So Bobby is a baby formula company, not a marketplace. They literally, produce baby formula. But I had worked firsthand with both the co-founders and as a mom knew the black market issue of like European formula being imported to the US. And I felt like, it was an important one to jump on. Candidly, we passed at their pre-seed because it just felt like too early in our fund journey to take that leap of faith. But then you know how you feel those like, oh, I'm kicking myself. Why did I do this? I had that feeling like right after that interaction, and then came back and made them take our money for the seed. So I think Bobby is a totally unique company. It's not it's an amazing company and they've done so well. It's not one that where I would diverge our strategy to do CPG businesses going forward. I think there's a lot of unique aspects to baby formula, regulatory wise and otherwise. And those founders are so uniquely special and talented. That's why we did that investment. But the broader question of like, so where do you go from here as a firm is still a great one. And I think it really comes down to asking yourself, like, what do you want to be building in your legacy as a firm? Like, what do you want to optimize for? I think there's plenty of people and some of our peers who have chosen to build, firms that are much larger in AUM, much larger in team size. And that's not what I'm optimizing for. I'm optimizing for, do I think I can be exceptional at the task in front of me? And for that, I mean, like, can I make a lot of money with the dollars that I have coming in? Do I think the strategy I have matches that and gives me the best advantage to do that? And is the style of how I do that investing work, does that match up with how I think I'm best suited and enjoy, candidly? Because like, the truth is we have the privilege of choosing what we want to spend our time on. And, Riley and I talk a lot about like, are we on the same page with like, do we like the type of investing we're doing? Do we like the way that we're doing it? Do we feel like we're being constrained in any way? And the answer always so far has been no, we just happen to love this. And I think for us having a smaller fund where, our second fund is a $55 million fund, same rinse and repeat as the first, we like that size. And so, I think I have definitely learned to kind of stamp down the FOMO aspects of our industry, which creep in often of like, well, but should we be doing something bigger and better and bolder and whatever? And it ultimately, I think you have to listen to yourself on what do you want to get out of something and where are you best positioned to be successful. And so for us right now, it's going to be continuing doing what we're doing. And that could change over time, but yeah, I feel very confident in the strategy and in enjoying it.
Yeah, no, that makes so sense. And yeah, I think like the impact that you are able to make or the companies you invest in are able to make seems like, very kind of rooted in what you want to do that way, whether it be the healthcare system with Float Health, child rearing effectively with Bobby. And
Yeah.
so it's great to kind of see these kind of themes relate despite them being very different businesses. And maybe, switching gears for a second here, our, I guess I call our peer group in this environment in venture capital isn't, particularly diverse in gender, race, in all different directions. And so, you were super early in your career in venture, went to operating, came back. You had probably, I don't know what that time frame was called, 6, 8 year or something gap in between venture roles. What has changed in like at least, the diversity inclusion standpoint in venture, or hasn't in that time frame from when you started to when you jump back into the scene?
I mean, it's interesting to look at like just the statistics because I don't think they've moved as much as it feels like they've moved actually, which is interesting. I look around at some of the diverse emerging managers, or I look around at emerging managers, and it feels incredibly diverse, which is awesome. I don't think, I mean, but then I look at the stats and I'm like, but it's not that much better. I don't get it. So, I think it could be that I'm in a pocket now that I didn't have exposure to before. And granted, I'm talking about emerging managers, which I think is a very unique class of people that are opting into a tougher, not tougher, but a tough slog of like getting your fund off the ground. And, you have to have this grit and resilience that I think, underrepresented people probably have had throughout their career because we've had to. And so I think you're going to find a different category of person, which I love. If I look at, the existing larger firms, that's where it feels pretty similar to when I was in venture. And that's where, I do hope that, and I applaud people who go to those firms and want to make change from within. Because I think, I look at, to your point on like the investment decisions I've made, I would never have invested in Bobby, a baby formula company, at a huge firm. It would have felt, I probably would have been insecure about like, ooh, they were going to typecast me as like the woman who wants to do a baby formula company or what have you. Having the flexibility of my own firm to do that with though is like amazing. And that's what helps enable these types of businesses and female entrepreneurs or people of color to do what they do. So I take it really seriously. And it's a big part of why I started Wave is I felt like I was going to do my best work, starting something new rather than joining an existing platform.
Yeah, that makes a ton of sense. And I think, what I'm kind of hearing too is that it enables you to do more non-consensus opportunities and things that you have conviction where you're kind of forced into like certain buckets at these bigger shops where it's like it's gotta kind of fit in here, which we're used to seeing. And so at the end of the day, I think, we're all going to be most right and most successful when you invest in something that's non-consensus that becomes consensus. And so it sounds like you're able to do that obviously within the confines of Wave, which is great to hear.
Yeah. Well, and I would say that again, it comes back to like knowing yourself and your style. I think there's certain firms that I gather are incredibly lone wolves. Like, they are very like seeking out investors who can be on their own and just kind of writing their own book and not wanting the collaboration of others. I don't work well in that. I like collaborating, and so I think I come to my best answers when I work with somebody who I respect and has a different opinion and who I feel supported by to kind of lean into my gut. And so I think it comes back to really knowing like yourself and where you're going to do your best work. And again, power to people who can do their best work at other platforms. I think that's awesome. It just, I knew for myself that wasn't going to be the path.
Yeah, yeah, that makes a ton of sense there as well. And I guess, you know, speaking to the how Wave operates, you made an investment float in Bobby. What happens then? How are Wave and Sara and Riley being helpful to founders beyond that? Because obviously we can all write checks.
Yeah. Yeah, that's sort of the easy part, I guess. Not always though. Yeah, I think that's what's so fun. And I think you probably feel this too with your partnership. It's like finding someone who you can collaborate with who has a very complementary but different skill set, but core values that are very much the same is hard to find. And I feel like I found that in Riley. I am so fortunate because his data science background, he's so much more technical than I am. He was at Airbnb way earlier. He saw an amazing marketplace from the ground up in a way that I couldn't because I joined so much later. So he brings so many different aspects to the table that I can't. And likewise, I think I bring things to the table that he can. So we make sure that part of our deliberate slow pace of investing is driven by the fact that we want to be able to both support companies whenever it's needed. So what that effectively means is like one of us is a point person, one of us is a board member. You're not getting like two board members for each investment, but I'm pulling him in often when it's like I can't be helpful here. He runs data boot camps for our companies because he can help them with like setting up their data infrastructure in a way that there's no chance that I could. Obviously, I'm helping regardless of whose portfolio company it is with M&A, regardless, or partnerships or what have you. And so those are tactical examples, but in general, the idea and the concept and how we like to work is, we both are talking about all of the companies because there are companies. We're completely equal as a partnership. That was something that was very important to both of us when we started the firm so that we wouldn't have any weird political dynamics of like your company versus mine. These are Wave companies and we are both equally invested in their outcomes. And so I'm, financially invested in his company, the choices he's made and he is in mine, but also just kind of how it feels. It feels like there are companies. And so that's, partly why we also are very collaborative on our decision-making process, because if there's anything, we have this concept of each of us gets one silver bullet in a fund. So if there's one investment where I'm like, I don't really care that you don't like this, I got to do it, we each get one of those. we've yet to use it, but we want to have that flexibility. But it would be hard to get excited to work on every company if each one was so polarizing that we were like, oh, I just don't like that one. So for the most part, all the companies are jointly agreed to and rigorously debated. But yeah, that's kind of how we make it work.
Nice, nice. No, that's helpful there as well. And the team ends up being a big component for you, as you mentioned, in terms of what gets you excited by any opportunity investment. And it can be like a squishy, subjective, gut feeling thing. I think that's fine. I kind of operate that way a lot too. But are there any, I guess, patterns you've seen in the founders that you resonate with and or have had more success with, whether it's certain areas of focus for them, certain backgrounds? Um, were they really early at companies, really late at companies? Were they only product managers? What, if any, kind of trends have you seen that resonates with like the Wave Capital founder portfolio company?
Yeah, I think you know, there's a lot, but it really to us, and we actually recently went back and kind of did some analysis on what's worked well and what hasn't, as it relates to kind of founder decisions that we've invested in. And I think, maybe this isn't the most uh, eloquent way of putting it, but like, are they a killer? Which it not doesn't actually mean murdering someone, but it does mean like this combination of grit and whatever it takes, you will make this successful. And that can come from like an acute passion that they built because they felt this problem so personally. It can come from just like I have a chip on my shoulder and I see this problem and I need to attack it and I will win. But that kind of CEO having the CEO co-founder having that killer instinct of like I will do whatever it takes to get this to be successful is probably the most important thing that we try to understand. Now, there's so many other things like the rest of the founding team is that rounded out. Do the skill sets match what the problem that the product that they're trying to solve? All of that. But I can give examples on that front of again, Bobby, Laura, and Sarah had no experience actually manufacturing a product. Like Laura had come from a family who had been in the manufacturing industry, but they were at Airbnb. That's a totally different sector. So if I had too rigorous of a checklist, that could have made them not worthy. But clearly, I knew how much they needed this to happen, and so that was like that fire underneath them that got us excited and continue. We see it today. Ryan, for him, he came as a nurse from Float, so he for sure had this like acute passion that he had built over years of his career. But that's what drove him, but it wasn't a prerequisite to us needing to see the investment. So again that's squishy, the killer instinct, but and again, not murderers. We don't want murderers, but I do want people that are just they cannot sleep, they cannot breathe, they cannot do anything until this is successful because it's hard and the ups and downs are brutal. And honestly, that's what I would look for in a GP too. I want someone who like no matter what, they are going to leave it all on the field no matter what. And I think that's what LPs look for in us too.
Yeah, no, I think it makes a ton of sense. And yes, hopefully we don't see any, Wave Capital founders on like a Netflix true crime series. And so, but unless they're just killing their market. But no, that is just great context there. And maybe just like one or two more questions here. I know we're running close on time, but I'll throw one more at you from back to Mike Larson again. Obviously the topic du jour right now is AI, and so he kind of wanted to know like, do you see AI playing a role in closing the gap between how a small, relatively lower AUM firm can compete or act like a much larger firm? Or I'll kind of rephrase it as like, what ways in which can or will AI change or improve how we operate our jobs?
Yeah, I mean, I think AI and GPT and everything, it's an amazing tool for building efficiency, both with marketplaces and with firms. Like, if you think about our job, you know, I don't think any of our LPs are looking at the caliber of the writing of our investment memo. They're looking at the concepts. They want to make sure that we've thought and prosecuted an opportunity well. But like whether or not my prose was beautiful and eloquent is probably not the thing. I hope. Sorry, guys. Um, so I think there's so much room for efficiency within operating a firm as a small team that you can leverage AI for. I think we're less we're not ready to say that like AI is going to take over the investment process. Again, probably because so much to me is about the pattern recognition of like meeting a founder and meeting the team. And that's not something yet that I believe AI is better at than I am, but TBD, we'll see. And actually I would then, extrapolate that efficiency thing to marketplaces too, because I think, you know, I view AI as like an amazing tool that many people can leverage. Some are already leveraging. We're not going to be investing in the AI infrastructure. I would question our ability to really be the best at that. It's just not our background as much. But I do believe that for any marketplace that has like operational components to it, customer support components to it, which most consumer or B2B marketplaces have, there's a lot of efficiency gains that you can have from AI. And I look forward to seeing margins get better because of it. So I think we're early innings on all the applications, but I'm very optimistic when I think about it as like this is an amazing tool to leverage, an amazing, language to leverage essentially, that can just take people further,
Yeah,
ourselves included.
I'm all for making us more efficient. So more power to that. But I agree, at the end of the day, investment decision wise, Sarah over AI all day. And so
Yeah. Thanks, man.
we'll
Same,
keep
same
that
with
going.
you, Kerby.
And I guess, lastly, obviously you're investing in a wide variety of markets with the underlying theme generally around marketplaces. Are there any particular themes, concepts, categories that you want to spend more time on, or just want to see from opportunities going forward?
Yeah, I've been seeing a lot and I'm excited by, but I haven't yet made an investment in kind of next gen of shopping and commerce. So I think because I've through Bobby's experience of being, a brand, I've seen firsthand kind of what that journey has been like for them. We have another kind of commerce enablement company in our portfolio. So I've seen a few different lenses and angles, but I'm very excited about kind of the consumer experience and how broken shopping is online today, which is I don't know, maybe it has been a long time coming, and there's been many who have tried and failed. But I do think that some of the dynamics around AI that can be leveraged, and just kind of the timing of the social platforms and where they stand in their life cycles. I think there's a moment here. So social discovery, shopping discovery, commerce, I'm pretty excited about.
That makes sense. And then, just ending, I think you and I have both come a long way from being junior VCs who
Yeah.
accidentally swapped our corporate cards at like restaurant 3000 Menlo Park. And so a
That's
lot's
the
changed.
one.
A
That's
lot, a
the
lot's
one.
changed in the years since you caught up. And so it's great to see you and Rod do a great job building out Wave. And thanks again for sharing your thoughts.
Oh, well, I mean, I honestly it's like having peer groups and friends who have like seen this whole journey. And I love that you've come up and stayed through venture because you've been feeling it firsthand, and I
Mhm.
can gut check things with you in ways that like I didn't experience it. So it's been such a pleasure and privilege to have like awesome people around the table that I can call on. So thank you for having me.
Thanks so much, Sarah.